This is Larry Williams, and what a joy it is to be back on StockCharts.com, especially because I think there's a great big stock market buy point coming. Now, how big it will be, oh, we don't really know that for sure, but in terms of a good buying opportunity in the market, yeah, guys and gals, I think we're looking at one directly ahead of us. I'd like to explain to you why. Some of you probably already have a bit of an idea what I'm going to talk about, but I'm going to take this into a lot of depth. So stay tuned. Let's do it. It's really the magic of October. Most bear markets bottom in October. Year after year after year, this has been true. In fact, in the 1990s, I did a series of seminars called the $1 Million Challenge, where I traded $1 million real time in front of people. And I always held it in late October because there was such a strong tendency for stocks to rally. We actually made over $1 million in those trading sessions. Some of you probably listening to this right now and watching it were there with me when we did it. But I was very careful. I wanted to be doing this presentation because it's live trading with a lot of money at the most opportune time of the year for substantial turnaround in the market. And that has been October. I'd like to show that to you. We're going to go back, way back to 1959. What you see is the red line is the annual cycle, the seasonal cycle of stocks. So you see 1958, a low, another buying point in 1960, late 1960, well, not too good in 1962, but nailed the 62 bottom. And just before President Kennedy had his heart attack, President Eisenhower had his heart attack, another time for the market to rally, and indeed it did. So that's going way back in time. We go to the mid 1960s, same thing. Look at that 1966 low at the buy point in October, the 1967 low at the buy point. So we've seen this pattern. It doesn't always work, as you see, but it can be really good at this pattern a lot. Mark Twain kind of said it best. Whenever you find yourself on the side of the majority, it's time to pause and reflect. Oh, Mark Twain had so many comments. We're going to get into some of Mark Twain this presentation as well. I think you'll enjoy it. So continuing forward, because people are aware of this October phenomena, does it really hold up? How has it been? Well, here we go from the 1970s down, 1975, close to low, great buying opportunity in 1975, late 75, a rally, but nothing big in late 76, a little early in 1977, spot on in 1978, and good at the end of 1979. So we see that it works usually, but it's no guarantee of stock prices rallying, carrying down to the 1980s. We've had 3 decades of this. Another nice buy point, 1985 in October, stocks just went crazy to the upside, as they did in late 1986. Oh yeah, 1987, the big crash of 87. When does the bottom occur? In October. This phenomenon is so repetitious. You can see it over and over. So we've looked at the 1980s. If we go into the 1990s, we see the October low. It's close to the October buy point, spot on, great point to be a buyer. And you get it, right? We've set up some wonderful opportunities in October, and October is coming up. Mark Twain once said that history doesn't repeat itself, but it does rhyme. And I think that's important for us to recognize. We can look at what's going on here and see that usually we do have a bottom at the seasonal pattern in the Dow Jones Industrial Average. So it's there. History doesn't repeat itself exactly every single year, but it does rhyme, and that gives us the basis for a potential trade in the market. That there is some repetition to history, but I'm going to take this a lot deeper so we can really see if this year the seasonal pattern will hold up. Well, let's continue looking into the 2000s. Now, this is starting in 1999, and again, there's a seasonal low, seasonal low, seasonal low, seasonal low in 2002. So clearly, there's really something going on in the market here, and we need to pay attention to this because it potentially is set up. Because have you noticed? We're almost in September. What follows September? October. So we're maybe a month away, maybe the end of September, maybe the first part of October, but clearly there's a strong dynamic influence that should shortly start to influence stocks to the upside. Now, let's bring this up to date. Now we're going all the way into 2000, 2010. There's 2009. The low point was early. 2010, great time to be a buyer. in late 2009 rather. 2010, cyclical low, seasonal low, another opportunity. 2011, spot on. 2012, spot on. Really strong repetition of this pattern. And here's in the late 2010s now. So we've gone from 1950 all the way into 2019. And again, we see lows coming or substantial rallies. I'm going to talk about that a little later. This is really, these bottoms can be deceptive. Clearly, it doesn't always work. There's 2018. It was not a good point to be a buyer. It was a little later, but we see that usually this has been a good buying opportunity. Is it perfect though? No. Guys and gals, this is the stock market. Nothing is perfect in the stock market business. Let me tell you, it can come and go, and you just don't know what's going to happen. That's why if we're going to really watch the stuff carefully, we really want to pay attention to something else that will confirm the opportunity that we think might be there. So I'm not guaranteeing we're going to rally in October, but when we get there, and we're going to get there pretty soon, I want to pay attention to it, and we can do that by looking at other indicators. Mark Twain did talk about October. He said, October, this is one of the peculiarly dangerous months to speculate in stocks. The others are July, January, September, April, November, May, in other words, every month. So Mark Twain is pretty bright about that. October looks like it's a great opportunity, but we need to confirm this once we get there. How can we confirm it? Well, that's what this presentation is about today, because I do think we can confirm this. First of all, this is where we are now. This is the seasonal pattern. We've got a low, as you can see, coming up. We see where it was in 2020. Great opportunity to be a buyer in the marketplace, and pretty good in 2019. That's the seasonal impact. And we'll talk more about this later, but notice that we don't necessarily have to be coming down. It's just when we get to this time period, away goes prices. We didn't have a big decline in 2020, but away went prices. So I'll give some examples of that later, but just keep that in mind. We don't necessarily have to come down into a bear market. We may just be in a holding pattern, and then boom, away we go to the upside. Now, StockCharts.com has my seasonal indicator in it, so I'm going to blow this up. Looking at the Spiders SPY, the seasonal pattern looks like it comes in late October. This is around the 20th, 23rd of October this year. This is the current seasonal pattern. We're currently, as this is being recorded, August 28th, 29th, we should see a little bit more of a rally. Then we start to see the seasonal weakness or abatement of prices, but then look what happens. At the end of October, there's a seasonal pattern, and you can, of course, follow this on StockCharts.com. I'd like to talk about my trading day of the month ideas so we can really specifically check out this October stuff. Let's put all the Octobers for the last 23 years under the glass to see if some days are better in October to buy than others. So we're going to buy every trading day of October. We'll buy the first trading day of October, the second trading day of October. We'll test buying on each trading day of the month. I use a $2,500 stop. I'm going to exit after being in the trade 2 days. Now, if we do that, we get some pretty interesting numbers I'd like to share with you. Mechanical trading strategy, no judgment in this. Look what happens starting around trading day 19, 20, 21, 22. In the last 23 years, that's number of trades, we've had 86, 87% accurate, 93% accuracy. So, wow, there it is. Again, that's why I held my $1 Million Challenge seminars. We were usually focused on trading day 19 and 20 because we see year after year, that's been a seasonal sweet spot for prices to rally. Trading day 10 has been pretty good as well with 82% accuracy. So you can pay some attention to that if you want to as well. But you get a sense now of, gee, at the end of October, we've got some real strong buying opportunities in this market. Certainly, short-term traders have to be alert for rallies. So you could do this mechanically, but as I said earlier, I like to take this to another depth and show you another way of looking at stocks and how they bottom in October. First of all, they almost rally in October. This is a good takeaway point. Later in October is better, so don't rush too prematurely into that October buy point. We'll want to be looking for it. I'm going to show you a pattern to look for in a moment. And the best days have been trading day of the month 19th, the 19th trading day. No, not calendar day. No, I didn't say calendar day, did I? The 19th trading day of October is a day when we're going to want to really focus our attention on looking for short-term opportunities on the long side in the stock market. Well, do we have anything else that can support this 2021 October trade? Yeah, we do. Lots of stuff I'd like to share with you. Cycles. What if the cycles are congruent, that they're also suggesting a low? That would be beneficial. Price patterns. I'm going to show you how price has bottomed consistently at major stock market bottoms, especially in October. I'm going to show you that price pattern to you in just a moment. Also, range expansion is a great indicator. To tell us we're getting to a low point. My pinch and paunch indicator, which my students know about, I'm going to be explaining that. That also sets up wonderful conditional times to be a buyer. And valuation. We can absolutely, as I'm going to show you, value is see if a stock is undervalued or overvalued, an index is overvalued or undervalued, or even a commodity. And finally, news. Can we use news? We'll take a look at that as well. So here's the cycle projection for the Dow Jones Industrial Average. This is in StockCharts.com. This is my cycle forecast. It is a mechanical formula that I came up with maybe 15 years ago. Is it perfect? No. But it does a pretty good job of saying we should start to rally this time of the year, come down, start to rally, and oh, look what happens. This is based on cycles now, not seasonal. This is totally different. It also suggests we should start to rally somewhere in the middle of September. So one cyclical component suggests we're going to start to rally. We've got a rally coming up here. So again, another reason to pay attention to what's going on in the market. We're going to look at this on the spiders, and we see here a low. I've blown this up a little bit. First part of September, then look at that, the October, and at the end of the October, we know what usually happens. So we see bullish cyclical activity that should take place. Now, this cycle forecast is simply a combination of what I think are the three most dominant cycles in the stock market, averaged together and smoothed out, equally weighted. So let's say there's a 14-day cycle and a 28-day cycle. You'd want to multiply the 14 by 2, so it's equal to the power to the 28-day cycle. Been a pretty good tool. It's very good for intraday work. For those of you that are intraday traders, our cycle forecast, which is available at StockCharts.com, has worked really well for that as well. Okay, so that's what we have for potential based on cycles with just my cycle work. If I also use timing solutions to do cycles, and we can take a look at what that is suggesting to us. And that's also suggesting a low point coming up around the first part of October. Look at that. Cyclical low, buying opportunity here, buying opportunity here, buying opportunity here, buying opportunity here, buying opportunity here. So we're starting to see confirmation because these cycles are not done the way we do seasonals, done totally different. So we're not looking at seasonal stuff here, we're looking at cycles. And that's altogether a different approach of looking at the market. So with that in mind, can we take it any further? Yeah, I think we can. We're going to look at specific price patterns of how these markets have bottomed most all of the time. This is the way markets bottom. It doesn't have to be in October. It can be any time. But most significant low points in the market have been identified by what I'm about to show you. First of all, number one, you have a big down Monday. Oh, it's horrible. The news comes out. Everybody's bearish on the market. Headlines are bearish. You'll even hear on flash on radio news, what they don't usually talk about the markets, talk about the market is down 650 points today, 1,000 points, whatever it is. So that's the first setup to this, a big down Monday. Then, right out of the blue, whoa, Tuesday rallies. And it takes out Monday's high. That's what you're going to be looking for. Is it isn't just a big down Monday. We may bottom there, we may not, but to lock it in is Tuesday takes out Monday's high. Let me show you what that looks like. This is a 2020 low. Here was Monday, big down low. The next day, we gapped up this in the spider, so it's a gap. It doesn't show the night trading. And big down day, and Tuesday took out Monday's high, and away we went. That's the pattern. Can we get a little better look at that? Yeah, here's the pattern in 1987. Look how the stock market bottomed. Monday, whoa, big down day. Tuesday, we didn't take out Monday's high, but we reversed, and that was the ultimate low of the 1987 market. Those of you who studied my work know we also call this the Tuesday turnaround. You'll see this a lot of times. The market down on Monday, turn around on Tuesday. So I really look for a reversal on Tuesday following big Monday weakness in the market. Here's 1962, all the way back in time. Monday, big down day. Tuesday, we took out Monday's high. We reversed in terms of making a high, held back a little bit, and away we went. You'll see this pattern time after time. Now that you identify it, ideally, this pattern will take place at a cyclical low or a seasonal low. That's where you're really looking for it. Big Monday down. So if in late September, during October, you see Monday's the big down day, down 500-600 points, boy, you better get prepared. We're most likely ready for a rally. And the signature of the rally beginning is taking out Monday's high. So range expansion is how markets work. I want to talk about this a little bit. It's really important. You understand this, you're going to become a much better trader. Markets rally on small ranges. They decline on large ranges. Moral is, don't let large ranges scare you. Large ranges attract me as a buyer. Small ranges attract me as a seller. The public, I think, well, I know it's just the other way around. When the public sees large ranges, big down closes, big down day, they get panicky and they don't want to buy. Kind of hard, frankly, to see the market down at 600-700 points, 2-3 days in a row. Step in and buy defies all logic. Oh, wait. The stocks are an illogical game. And this really helps us identify this illogical solution. We can see this in the chart. I've done the weekly range expansion. He's doing a moving average of the average range. And notice when the average ranges are very high, buying opportunity, buying opportunity, buying opportunity, buying opportunity, buying opportunity. So a big pickup in ranges, weekly or daily, says, don't get frightened. We're about ready to bottom in this market. But because those big down days, boom, boom, boom to the downside, look so bad on a chart, they're kind of frightening to us. And it takes a while for us as traders to realize that we need to take advantage of this and not be frightened by it. Here was 2020 low that we saw. We called that low on StockCharts.com. Go back and look at that presentation. We nailed the low, about the absolute low day of this market. How? Well, look at range expansion sets up. It doesn't say we're going to buy right now today, but boy, I got large range expansion. I've got to be looking and taking buy signals in the market. Big Monday down, Tuesday takes out the prior high. There it is. There's the entry in the marketplace, right? So that's how we can combine these things and kind of keep everything working together for us. Another indicator that can be helpful, it's a very good indicator, it's now in StockCharts.com, is my pinch punch indicator. This is so simple. When any market is in a downtrend and this index gets above 40, prepare for a rally. When it rolls over, we have probably bottomed in the marketplace. So simple indicator, it comes up above 40. If we've been declining, we're in the area of a buy point. And then when it peaks or rolls over, we've probably already begun the rally. That's all there is to it. Let's take a look at it. Here's the Spiders Index, the SPY. We got above 40. We're looking for a buy point. We roll over. Oh, a little early this time, aren't we? Like I said, nothing is perfect. Here we are again. We get above 40. We roll over. Bingo, we nail it. Now remember that we have to be coming down. Here's in 2019, the October time period, prices are coming down. We get above 40. We're alert for a buy signal. We roll over. Away it goes. 2020, we get above 40 right here. Oh, start looking. Oh, we tip over 1 week. This is on a weekly basis. There's our entry there. So it's a really good setup tool. We're coming down. We get above 40. We better be looking for a buy signal in the market. This works on everything. It works on stocks. When I lecture in foreign countries, this is the indicator I love to show because it works on markets I've never even heard about. Stocks in Italy or China or Argentina. I just put this indicator up because it really spots bottoms. Again, the market's coming down. We get above 40, we're alert, we're close to a buy signal. When this starts to roll over, the move should begin. That's really all there is to it. This is my pinch punch indicator. It is also now available in StockCharts.com. Here's gold, what we were just looking at, Apple Computer, right? So it doesn't matter for the stock or a commodity. It seems to have a universal ability. Here's gold for a big up move in gold. Look what happened. We get above 40, higher, we start to roll over. There it is, the end of it. Now, if we're rallying, this isn't necessarily a buy signal. Here we're rallying, it's in sync. We're rallying, it's in sync. That isn't what we're about. When the market is rallying and we can get above 40, that's the point we're looking for. That's the point that's going to be significant to me as a trader to say, uh-oh, I better wake up and start to pay attention to the market here because I think we're about ready to start a rally. Here's another example of pinch punch indicator on Facebook. We get above 40, uh-oh, look for a buy point. We get above 40, over here, look for a buy point. It's a beautiful indicator that will help you determine when you want to get in and out of your stocks or the market. So we want to be looking for that in October, don't we? On the fundamental valuation, we can do that as well. I'm going to show you something, not an overbought or oversold indicator. That's just price. Price is higher or lower than it was X days ago. Here I'm combining fundamentals, a valuation technique with an individual stock or with the market. Here's Facebook as an example. This is so interesting. We're undervalued down in this zone. We could be oversold over here as well, right? But clearly we're undervalued in Facebook. We want to be a buyer. But here we're never oversold in Facebook. There's no big selling, but we're undervalued. And here we are undervalued, so we want to be looking to be a buyer. So that's the unique thing about this index. How unique is it? Well, look at Facebook right now. Facebook is close to the undervaluation zone, although price hasn't been doing anything, has it? Look at that. Price is actually rallying, yet we're getting into an undervaluation zone. So that's another tool that we can use in the stock market to say we're in a value zone, overvalued or under zone. Here's Costco. Costco is very high prices, but we're undervalued. Yeah, we could be oversold here. We're also undervalued. There's not much of a break here, but we're undervalued. So my undervalued measure tells us that, yeah, we're real close to absolute value in the market, and we can use that. Here's the Dow Jones and Transportation Index. This is really interesting. Look at prices up here. If you look at just on a chart, you'd say, wow, we're probably oversold or overbought rather. The market should, but look where we are. We are undervalued in the market. That's what's so unique about this index. Again, we see a time period when we're undervalued, consistently undervalued, and of course we make higher prices. So this is another tool you can add to your repertoire that's going to be really helpful in confirming the October low or whenever you're looking for a low. Here's the triple Qs. We're in an undervalued zone right now and getting close to October. Notice we're not selling off here, but we're undervalued. Didn't sell off here, we're undervalued. So really neat indicator. I've been using this indicator for, 20, 25 years now. It gives us a fundamental sense of, are we overvalued or undervalued in the marketplace? Now, if you're looking for sell signals, it's just the reverse. Here's silver. Silver's in a big downtrend. We get overvalued. We want to be a seller. Notice here, this silver hasn't gone anyplace for a long time, yet it pops up, it's overvalued. It's overvalued, so we want to be a sellers. So you can use this, I think, the best way in a downtrend, sell over valuations. In an uptrend, buy under valuations. Well, news and market bottoms. Markets bottom on bad news. The Wall Street Journal is not going to tell you to buy. You're not going to see any newspaper out there that says buy now. They are not in the business of doing that. So I'm going to go back to my old buddy, Mark Twain. Mark Twain said it best. If you don't read the newspaper, you're uninformed. If you read the newspaper, you're misinformed. Though I don't use news, I think it's going to distract us from what's really going on in the marketplace itself. You want to be really careful of that. Everybody, especially now, we're news junkies. We get everything in instant on the internet. That's right there. First of all, it may not be reliable. And secondly, it's emotional. The way you sell newspapers is to have emotions in them. And that's what traders don't want. We want to be able to analyze objectively what's going on in the marketplace. And news is a distractor. The only way you could use it is if the headlines are really bearish, really emotional to the downside. We're probably at a really good buying opportunity in the market. So whatever the news is, I want to do the opposite, as Mark Twain talked about earlier. Market buy points can be really deceptive. Ideally, we decline into a buy point, but that's not always the case. There seem to be inflection points or time when prices just blast off. I talked about this earlier. I want to go over it again. This is one of the errors I've made. I've learned. Some of my errors I've learned from, some I'm still learning. But I often made the mistake of waiting for sell-off, so I missed the buy point. Like, oh, I'm waiting for a cyclical low to come, and the market doesn't sell off. And so I don't buy, and the market takes off to the upside. Or there's a seasonal low, October low, and the market doesn't come down. I want to come down, right? I want to buy low. We all do, human nature. And then the market zooms to the upside. The market, it doesn't give us what we want. Hardly ever does it do that. So let me show you what I'm talking about. These are inflection points. Notice we have lows in the market scheduled here, 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 and here. But did we really sell off here? No, the market was holding up. It's just, you better get ready to buy. A little bit of a decline here. Yeah, that might have said, yeah, we declined, let's buy. Up here, you probably would have said, well, we haven't declined. I don't want to be a buyer, but it was a good buying point. And then in June of this year, the market's going sideways. We really don't have a big decline in the market, but we have got a nice rally. So when we look at these indicators and charts, here's the deception you need to be careful of. The deception is we have highs and lows. That's the way these things plot out, right? But the market moves this way, not quite straight up, but it tends to have an upward bias to it. So visually, we expect, well, prices should go from here down to here, from here up to here, here down to there. Be cautious of that. What we're looking for is this time period. Oh, look at that, this time period in October. Prices may decline, they may be holding, they may be rallying. But that's what I'm looking for. Let me show you an example of that. A couple examples. Here's the seasonal low in 1986. Notice prices didn't sell off, but there's a seasonal low and away they go. Same thing over here in late 1988. There's no sell-off at all, but away prices go. In 1985, there's no sell-off and away prices go. Look at that. Here's maybe one of the best of all times. Look at this. Cyclical low, seasonal low in here. There's no decline at all, and prices just went crazy in phase with the seasonal buy point though, right? So make certain that we don't have to have a decline. We may or may not decline. If prices are holding up, I actually think it's more positive because the markets can't sell off. So if you get to one of these inflection points and there's not been a sell-off, it's going to be even more bullish. Well, I hope you've learned a little bit today. I hope you're prepared now for the October low coming up. We have our new indicators on StockCharts.com. You can go to my website, ireallytrade.com, because even at 79 years of age, I still trade actively. Or you can email our customer service at ireallytrade.com. If you're especially one of our students, you have our stock courses, we can get those indicators set up for you. So the indicators are there now. We're really happy. StockCharts.com has all of our stuff. And finally, I'd like to thank Samuel Clemens, Mark Twain. Oh, what a guy he was. Oh my gosh. And what a great quotation for those of us who trade stocks. There is no security in life, only opportunity. I hope what I've done today is point you in an upcoming opportunity for the stock prices. Until next time, this is Larry Williams wishing you good luck and good trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.